Good morning. Welcome back here to Trading Money. Great to have you aboard. Last day of the trading year. Markets will be open for the full schedule here today. Uh, there are a few markets that will shut down, but stock, equities, commodities, they'll still be trading strong here today. We'll see some volume pick up here today. Markets will be closed tomorrow, and then back open on Thursday for normal action going forward. Want to take a look at a couple things here with you. Want to take a look at this idea of the dogs of the Dow, as I've been asked about that a few times. Take a look at normal price action on this day. The price action in stocks can be quite variable on this day. And go take a look at what's going on with gold. Okay, as gold continues to break down, Max, and you mentioned, will it capitulate a little bit today? We'll talk a little bit about that and what's going on. Let's start out with just looking at this day in history. Okay, with the market and what has been typical of stocks the last day of the trading year. Okay. Now you'll notice I'm going back here. I'm back at 2006 to 2007. Okay, and this is when the bull market was kind of at its peak, raging. 2007, the market set a brand new high. But 2006 was a good year for the markets, for the bulls. And as we headed into the end of the year, okay, stocks pulled back. And look at this last hour. I have an hourly chart here. December 29th. Okay, this is the last hour of the trading day. And notice just that kind of general rollover. This is on this scale here. In fact, if I go to the SPX, you can kind of see it a little bit better. From 1422 down to 1417. So about a 5-point sell-off into the close. Okay, what happened the next day? Okay, the first trading day of New Year's, everything that was sold at the end. Okay, we saw it gap up, and the market erased those last hour losses immediately on a gap up on the first trading day of January. Okay? This is a common theme. But we go into 2007 to 2008. This is kind of the market had set its tops. We're now dealing with subprime. We're dealing with the Fed. The Fed pulling back. January ended up being a really rough month. The last hour of the trading day, though, in 2007, a pullback, almost 10 points. The scale is significantly different here. Almost 10 points in that last hour. The next day, New Year's, we did get that typical gap up, but it wasn't able to hold and led to a really rough trading month for the month of January. Okay, so now let's go into the financial crisis. We're full-blown into the financial crisis. We've had Lehman Brothers. We go 2008 to 2009. Here, the market is kind of going up on that last day, getting a nice little surge. Okay, nice little surge. And then, hey, first day of the year, new year, market gaps up and surges higher. Okay. 2009 to 2010. This is after a really strong 2009. Market had finally set a bottom. We're still dealing with some issues in regards to what's going on economically. Take a look at the last hour of the trading day of 2009. Okay, significant drop. 2009 was a very good year for the markets in regards to its overall return from March to December. Okay, a lot of people refer to this as tax selling. Excuse me, for some reason it flipped the screen there. A lot of people called this tax selling. A lot of others said, well, it's the automated trading, the algorithms. But for whatever reason, okay, market dropped here about 8 points on the S&P. Notice on the first trading day of the new year, gapped up, erased all those last hour losses, gapped higher, and decided to continue on higher. Let's fast forward a little bit more. 2010, to 2011. I hope you're kind of starting to see the theme. Okay, and here's 2010. The last hour of the trading day, we get a little bit of a pullback, but not much. Only about 2 points. Get kind of a whipsaw rally back into the very end. First, the new year 2011, big gap up. We're talking about almost 10 points on the S&P in regards to a gap higher, and 10 points on the S&P back in 2010 was a lot more than what 10 points is today on a percentage basis. Fast forward 2011 to 2012. Okay, we see 2011. We see a strong sell-off into the close. I strongly remember this one. Google kind of rolled over into the close here, but we're looking at about a 6-point sell-off in that last hour. The next day, New Year's. Okay, the next trading day, New Year's. We're talking about a huge gap up. We're talking about well over a full percentage point gap higher in the market. Okay? And then we go to 2012, 2013. Now, 2012, 2013, we're dealing with the fiscal cliff, right? The fiscal cliff, there's all those worries, and we saw something different. We saw some selling come in right at the end, but then it all come back. We saw actually strong buying go into the end of the year. You'll notice this is abnormal. This wasn't what we had been seeing year after year after year, but we still get the gap up the next day. Okay, a very strong gap up, almost a 30-point gap up here in the market, almost 2% higher in the market as some of the fiscal cliff worries were alleviated, and we got that explosion. So where do we go? Where does the market decide it wants to go now? What is it? Is it doing anything similar to past years? Well, yeah. I mean, we're kind of bouncing around. Some stocks getting sold, some stocks not. And this is one of the reasons why today, as we head into the end of the day, we start to see any kind of selling. I want to be an aggressive buyer, okay? Because historically, we get very strong moves. Whether we've been in a bull or a bear market, very strong moves on the first of the year. And so I want to be exposed. I want to have more long than short. And we'll be looking to add here as the day goes forward. So that's one of the patterns that we've seen in the market in the last 7-8 years, and it's been pretty strong. Okay, pretty strong. Very few exceptions. Now, one of the ideas in the market, one of the theories, and it basically came about in the early 90s, was this idea of the dogs of the Dow. Okay, dogs of the Dow. And this is an idea kind of based on dividends for the blue chip stocks. And saying that, as a blue chip stock underperforms one year, we would expect it to outperform the next year because it's relatively cheap. Okay, and there's kind of a lot to the theory, a lot more to the theory, but the whole idea is, hey, take the bottom 5 performers in the Dow on any year, buy it up in the new year, and you're going to outperform the market. In general, back-tested back to the 20s, the system has outperformed the S&P 500 significantly by almost 12% a year. Okay? Now, it doesn't always work. In fact, this whole dogs of the Dow theory is pretty infamous for not working at the top of a bull market, which you can, see why. 2007, 2008, the dogs of the Dow didn't work. End of the .com boom, that 99 area, the dogs of the Dow didn't work as the market pushed into a bear market. So this whole idea of dogs of the Dow really is a bullish type of a theory. But the idea here is this: what are the worst performers in the market this year? Okay, AT&T is one of them. Okay, AT&T. So what does dogs of the Dow say? buy AT&T. It should outperform this year. Okay, Intel has been an underperformer, and if we look here at Intel, overall, it's gotten a nice little boost here of late. It was a strong underperformer in 2012. Okay, notice how it pulled back significantly. In 2012 was a strong underperformer, and now this year here, 2013, what's its performance been like? It's up almost 30% here in 2013. Okay, so we look at something like McDonald's. Okay, which 2011 was a big leader, 2012 a big drag. Now here in 2013, some good performance. Did it outperform the market? No, not necessarily, but it was one of those dogs from 2012. There has been a little bit of shakeup this year in the Dow. I'll show you later today the top 5 worst performers in the Dow this year. I've shown them, showed you a few of them with the IBMs and whatnot. But this whole theory is kind of one of those where in January 2013 you want to be a buyer of McDonald's. You want to be a buyer of Chevron, which had underperformed here in 2012. And did it live up to outperformance here in 2013? Sure. But it's an investment theory, not necessarily a trade theory. And, so we need to keep that in mind. And we'll talk about that more as we go forward. The last thing I want to show you before the market opens is what's going on pre-market. Stock futures are up about 3.5 points, okay? They're up just slightly. Boeing pretty flat here. I know a few of you are still in Chesapeake and in Nucor. With what the market's doing, you probably could get a little bit more upside on those this morning. Pulled them off yesterday just because of where the options were, the risk, and where they were pulling back from the 7. Held Boeing for the challenge, kind of on a little more gut feel. We'll talk about Boeing a little more. But overall, market pretty flat across the board. The one thing that's not is gold. Okay, gold and oil. Take a look at gold. Gold just in the last little bit here took another flush here in the last 3 hours. Just kind of rolled over. It's down about 16 bucks right now. Max, you asked a really good question. Is gold going to capitulate today? By capitulate, when someone uses that term, they're talking about a high volume sell-off that tends to mark a bottom. So you get this high volume sell-off, the bulls finally throw in the towel, they sell their remaining, and there's no sellers left. Okay, you don't see as much capitulation with gold as you do with in individual types of stocks. But I want you to take a look here, long-term gold chart. Okay, long-term gold has still been a strong outperformer. Even with the strong pullback in gold over the last 2 years, gold is up 400% since 2001. If we kind of retrace this a little bit, okay, just retrace this recent rally, you'll notice that we've kind of come back into the retracement areas. Okay, from a technical standpoint, to find support here in 2014 for gold, somewhere in this area would be logical. But keep in mind how big this retracement area is. We're talking about the 62% retracement is down in the 900 level. Okay, with gold breaking down here today, it's threatening to close at a fresh low for 2013 and at a 4-year, multi-year low. Okay, so this is some pretty damaging action here. Are we going to have enough volume to capitulate? I don't think so, simply because a lot of central bankers are gone, and the central banks are really who control the gold. And so I don't expect that we will have a ton of capitulation there. It's kind of a pullback with going into new lows that's a little tough to want to step in and be a buyer of right here, right now. Do I suspect we'll get a chance? Yes, I do. But right here, right now, probably not. All right. Market's opening up here. We got Boeing up about 50 cents. There's been some more chatter since last night. Well, last night Boeing was awarded another contract. It wasn't a huge, I think it was like a $900 million contract. They're also going into the union vote where Boeing is basically saying that they're going to shut down their or move their wing manufacturing facility out of the state of Washington if the union doesn't accept the Boeing's recent proposal. So that drama is going to continue to play out. Chesapeake up about 5 cents. Nucor pretty flat here. For those of you who are still in those, look, overall, I'm still bullish on them. Okay, still bullish on those stocks. I do think there's a strong risk of them pulling back significantly today. If they do, we see Nucor down around 52.80. I will likely step in and be a buyer there. Okay. We have Qualcomm. If that breaks 74 here today, would love to be a buyer there of Qualcomm. Bank of America getting a little bit of bounce. Tesoro, Valero, Western Refining. Okay, this is one of the reasons why with these stocks, look, Tesoro's still in this consolidation, but just within minutes before even the options open up, completely wipes out yesterday's losses and starting to move higher. Western Refining going up to a new 52-week high here. Valero as well into a brand new high. Quite simply, they are being helped a little bit this morning by the pullback in oil. Oil's pulling back here. USO isn't trading just yet on stock charts, but oil, I'll show that to you here. Oil futures, you can see oil futures pulling back pretty strongly Monday and then today, and that does benefit the refiners in general there. Okay, so the refiners really solid morning this morning. Google's up a couple bucks. Kihu. I'll show you Kihu here. I stepped in. I bought a little bit of Kihu in the last minute of the day yesterday. Kind of as a flyer. Just some of these January 82.5 calls, okay, on Kihu. Let me kind of show you that. If you take a look here, Kihu's been consolidating right here. It had every chance to break down here in December. Snapback has held above 80 now for a good week. And as we head into the new year, expecting a little bit bullish movement. I like what things like Kihu, Baidu, Sohu. The price action in these is just really nice, and all signs that it wants to continue higher. Those options there on Kihu are not too bad at all. Okay. As we scroll kind of down the board, some other things here. Dry ships and the shipping industry. Okay, we talked about that a little yesterday. If we see it weak for a third day in a row, it would actually give us a buy opportunity. They are bouncing a little bit here today, so I'm not as anxious to buy in right here. But as we head into the last hour of the trading day, we'll definitely look at putting on a position in one of these shippers. Other than that, kind of going across the board, Twitter's doing its normal, okay, up about $3, kind of going all over the place there with Twitter, kind of doing its normal. Phillips, one of the reasons the refiners are doing well, Phillips 66 here, I forget who it was. Somebody stepped in and bought some of their assets for Phillips 66, and that's given them a bounce. And some of the other refiners are bouncing kind of with that. Now, keep in mind, these refiners are very volatile. Okay, they are very, very volatile. They're going to move. They're going to move in large percentages. Meaning, to see Valero go negative today and then end up $1.50 would not be a surprise at all there. Okay. Yeah, Cricket trying to bottom pick the shippers. Not necessarily. We just talked how yesterday how these things when they have these 3 days in a row of pullback, where we get this kind of first pullback, second pullback, and then we're weak the third morning. They tend to find a short-term bottom where they can be bought on that bounce. Similar to what we see back here in September on dry ships, similar to here in August in dry ships. Do we get that opportunity? Maybe, maybe not. But we may. Yeah, thanks, Max and Jerry. Okay, Warren Buffett. Yeah, okay. Sounds like something he would be doing there. Okay. Um, Okay, Armand, good question. Why did we get out of Nucor yesterday? Okay, Nucor we got out. It hadn't broken the seven. We're still bullish on it, but it came off of the upper Bollinger Band, and the options that we had on Nucor. If we get a 30, 40, 50 cent pullback in Nucor today, it would destroy those options. Okay, those options would really contract in value significantly. Okay, so that's why we got out. The option risk with the options we were in heading into the last day of the year, some of the unpredictability there, very, very difficult overall. Okay, to kind of want to keep that just from that risk factor. I felt like we had more risk in that than reward potential. And I didn't like being in that position, so pulled it off. I'd love to get back in. Okay, I'd love to get back in. 53. We get down to 53 today. I will likely step in and buy some more and get back into Nucor there. Okay. Trade down. Yeah, Jeff, will we be making some of the strategic purchases today more than normal? Yeah, I will show you the stuff I get into for the Vibe and Trend Rider. We'll probably get into something into the close here today. Absolutely. Absolutely. Okay. Absolutely. Armand, I'm not sure what you mean by back into January. Um, Help me understand that there. Okay. But Nucor was just pulling it up because of where those options were. Chesapeake was a full on breakdown. Below the seven. Do I think it's overly bearish? No, I don't. In fact, as I kind of went through Chesapeake a little yesterday, I thought, well, where do I want to be a buyer here? Looked at about 2660 if we got there. Would like to. Oh, okay. Back into January options for Nucor or February. I haven't thought about that. I think the January options, if they contract nicely for Nucor, would actually still have good value to be able to get into them. But wouldn't have any problem looking at February. It really would come down to kind of the risk reward. If we're a strike or two into the money on the January options, we're not going to have a lot of time decay for Nucor. Okay, not a whole lot there. Okay. Boeing. Okay, Boeing pushing up about a 0.5% here today. Boeing ended yesterday down about 98 cents or something. Today up about 85 cents. Look, this is good action from a technical standpoint for the Boeing position. Okay, overall here, this upward trend on the hourly chart remains intact. Okay, is this upside here today going to last? Maybe, maybe not. But overall, this is a nice whipsaw back. Where Boeing's getting a little bit of a lift here today. Being the last day of the year, we'll see. Okay. Um, if we get back into Nucor, will the wash rule apply? You've never had this happen, so you're fuzzy about the times this would be a concern. Um, I'm trying, Trade Hound, help me understand what you mean by the wash rule. Are you just talking about you don't get into another trade that you've had a gain on because you don't want to lose that, and the trades kind of become a wash with a gain on one, a loss on the other. Help me understand there. I apologize. Okay. Um, yeah, Marvel, MRVL, Marvel, very interesting stock. Getting a gap up here today, pushing into a new 52-week high. Look, Marvel's a volatile one. The price movements, they move in large percentage moves. The trend remains strong. The trend remains very bullish overall. The indicators are strong. The volumes have been decent. Would I enter here? No, I'd have a difficult time entering here, just simply because we're so far away from the 7. Marvel has a tendency to gap up like this and not have a ton of follow through in the short term, but is very buyable on small pullbacks. Okay. Yeah, Tradehound, in regards to that wash rule, as I described it, do we want to get in because we don't want to give up the gain on it or anything? Yeah, I don't think of that at all. Okay, I don't think of that at all. Okay, with Nucor. Yeah, if you mean the tax where you're talking taxes. Look, in option trading, I'm not accounting for taxes at all. That doesn't even register in my mind in regards to the Uncle Sam, because bottom line is going to have to pay the taxes on gains no matter what year it is. Sure, do some years matter a little more than others as tax laws are going to shift and change? Yes, but tax laws we need to pay attention to that much more as investors, but not really as traders. Okay, not really as traders there. Okay. Yeah, Cricket. Marvel fills the gap usually. Yeah, you're right. It does. It shows it has a strong propensity to fill those gaps just simply because of the volatility overall. Okay. Alrighty. So market open. It's slightly higher. Chesapeake Nucor pretty flat. Qualcomm not pushing above 74 yet. Here, the refiners. One of the real strong points in the market this morning. We also have some strength in some of these Chinese internet stocks, the Baidus, the Qihus, the Sohus, the Sinas of the world. A little bit of strength in those here this morning. But overall, this is this is last trading day of the year. A lot of these stocks that are up are basically recovering some of yesterday's losses, but not fully across the board. Gold here. Let me go show you gold since the equity market's open. Okay, gold is pretty much kind of stabilized here, still in a bearish position indeed, but overall it's one I don't see a great risk reward for gold to get in right here. Day trading it, sure. Okay. Market closes here today at normal time. It'll close at 4 o'clock. Okay, it'll close at 4 o'clock. Okay. Jimmy, really good question. Are we looking to short anything a couple hours before the close? Yes, I am. Okay, I am. No, sorry, one T. The equity here. Let me show it to you here. When you're looking for the hours, I always go to the New York Stock Exchange, the NYSE. Okay, and that'll show you the hours here. 2013, 2014. We're closed. Equities are closed on January 1st. They don't close early though here on the 31st. Okay, you generally have to come down into the footnotes here, okay, to find that. There are some fixed income markets that are closing at 1 o'clock Eastern today, but the equity markets themselves will be open till 4 o'clock Eastern, 4 o'clock Eastern today. Okay. All righty. So yeah, we'll be looking to potentially set up a day trade for the last hour of the day on a put, but look to be holding that put into the new year. I will spend more of my time looking for upside plays to hold into the new year. But I'd rather add Qualcomm above 74 or add something else. We don't have to pull back at the end here, but if signs are showing that, we'll definitely look at that. But won't make any of those decisions till it gets much closer to the close here. Okay. All righty. Well, thanks for hopping on. I'll be back on here at 1 o'clock Eastern to give the fourth class here on technical analysis. I'm going to go out. Yesterday we looked at support and resistance. We looked at technical indicators of the three different categories. Today we're going to go and start putting some technical indicators together, and I'm going to show you two trading systems that I used back in my fund managing days. That they're not Vibe or TrendRider, but they're technical systems that I've used. We'll look a little more at the stochastics. We'll look a little more at the ADX and at a few moving averages as we kind of put some of the as we kind of put some of these together and give you some other trade system options there for you. Okay. Yes, market here today. Okay. Market here today, equities, okay, stocks, they will be closed tomorrow, but they will be open today until 4 o'clock Eastern, okay, till 4 o'clock Eastern. All right, well, thanks for hopping on. We'll talk to you later. Take care.